Hello everyone, my name is Santa and I welcome you all to Executive Corner Expert Talks 20 Minutes Roundup with Mr. Sachin Oza and Mr. Stephen Williams. They are the co-chief executive of Reabold Resources PLC. So in this section, we bring you industry leaders, successful business owners, market and equity advocates, all under one roof to help you discover the insight of the stock market and help you understand how one can create multiple passive income streams. So in today's show, as I said before, we have Mr. Sachin Oza and Mr. Stephen Williams, co-chief executive of Resources PLC. Welcome Sachin, welcome Stephen. It's a pleasure meeting you.
Thank you, Santa.
Thank you.
Well, to begin with, Stephen, let's start with you. Could you please brief us about Reabold and how it has been doing things differently?
Yeah, sure. So Reabold Resources in its current form was really started about 3.5 years ago. And we put the Reabold strategy together to take advantage of a very specific set of circumstances that was developing in the oil and gas industry and the oil and gas small cap space in particular. And we'd seen an opportunity to take advantage of the fact that some very high quality upstream oil and gas projects had become stranded as a result of a lack of investable capital for the smaller companies that had many of these projects. And we saw a great opportunity to access capital and invest into these projects and really unlock the value within them. So it's not a typical oil and gas company approach. We're not looking to target a certain amount of production, a certain amount of barrels per day. That's not what we're trying to do. We've not even really got EBITDA, revenue, profitability type targets. What's behind our strategy is taking cash, investing it into projects that were stuck, unlocking the value within these projects, and then probably monetizing them and actually moving on and recycling that cash into the next set of projects. So it's really about how much cash can we get out of a project versus how much do we put in the first place. And there was a fantastic opportunity to do this a few years ago when we started. We're now obviously a few years into that strategy, into that journey. We feel we put together a really exciting and impressive portfolio of projects, and we have been very active within those projects as well. So we've drilled a lot of wells. We've drilled more wells than any other company of our size over that time frame. We managed to stay as active as we could during 2020 when it was obviously a very difficult time to get things done. And we've really taken those projects a significant way forward now to the point at which we believe they will really start to demonstrate the true value potential within them and potentially get to the point where we're looking to monetize them and crystallize value from them.
Sure. And Sachin, would you like to share some updates on West Newton and talk about what makes the project so exciting for the company and the investors?
Yeah, certainly. So I think West Newton in some ways really typifies some of the comments that Steve made. And we'd again taken a project that was stranded and really created something that we believe is very special from it. So just to talk you through that, so West Newton is an onshore UK field and it's near the city of Hull here in the UK. And this is potentially one of the largest hydrocarbon discoveries made in onshore UK for several decades. But it's not only that, this is a project that also adheres to our strategy because it's adjacent to abundance of infrastructure such as gas pipelines, chemical plants, gas-fired power stations, gas storage facilities and the like. And therefore it's ideally suited to have the hydrocarbons evacuated from the field and have these sources of consumption and or infrastructure. But the field itself so far has had 3 wells drilled on it. The most recent one was called the West Newton B1Z well, and that was drilled in December of last year. And really, I think, highlighted a couple of very key aspects. So the first thing is that third well, this B1Z well, it was quite a large step out from the previous wells that had been drilled on the field. And what it really demonstrated was how extensive this field was from an area point of view. The other key aspect about it is that the reservoir in this field is extremely thick and interpreted to be continuous across this entire structure. And we know that from the data gathered from the drilling activity and from the 3D seismic data. So there's also been a significant amount of data gathered through those various sources. Finally, I think it's worthwhile pointing out that because this field is onshore, it means that the capital costs are much lower than, say, a comparable field in the offshore setting, and it makes the project economically robust, and therefore it makes it strategic and attractive to industry. And that's for all of the reasons that we've just gone through, and therefore it really is one of the jewels in our portfolio.
Definitely, and by what you just said, West Newton clearly seems to be a major project for the company. So Stephen, coming back to you, what can we expect from it by Q4 of 2021?
Yeah, quite a lot, hopefully. It's a very exciting time within the progress of the West Newton project. Just getting underway right now is the testing program, where we're testing 2 wells, the B1Z well that we drilled just at the end of last year, and the A2 well, which was the first well that Reabold funded within this project. Now, going back to what Sachin just said, we've already significantly de-risked this field via the drilling, and I think it's beyond any reasonable doubt now that we have a really major oil and gas resource here. So the only thing really that's left to prove is how the wells will perform and how they will flow, and that's what will be proven by the upcoming tests, which will give us a lot of data around how wells will perform in this field. So the upcoming test program, which is just getting started right now, as I said, is extremely important, and we'll have a lot of information from that in the very near future. But we don't stop there. There's a lot more going on in 2021 at the field as well. So once we have the data from that test program, the partnership at West Newton will be commissioning a CPR. So we'll get very up-to-date numbers in terms of volumetrics from an independent party, which I think will be very important for investors in particular to see. And then beyond that, in the second half of this year, we will be drilling another well, which will be, I guess, the most important well of all. And that will be a highly deviated or horizontal well, taking into account all of the data that we gathered from the vertical wells that we'll have drilled and tested. And that horizontal well is the absolutely crucial well to prove what the ultimate flow rate from wells on this field can deliver. So lots going on at West Newton by the end of this year. This is all planned for 2021. And then, beyond that, we shouldn't forget that West Newton is the key field. It's the discovered field. But we think that the activity at West Newton has actually also de-risked follow-on potential in this new emerging UK onshore play, which we have within the license area. So we have a number of follow-on targets that look very like West Newton, and they will all be hopefully something that can be exploited in the future beyond 2021.
Certainly. And Sachin, coming back to you, if you could just shed some light on the recent developments in your Corallian investment.
Yeah, sure. So the primary asset within the Corallian investment is a project called the Victory Project. And this field is offshore UK in the northwest of Shetlands. It's been fully appraised and really stands as a development project. And so from that point of view, is very low risk technically. It is estimated to have 157 BCF of resource, and that's the equivalent of around 25 million barrels of oil equivalent. And this project has an NPV of up to 146 million pounds. So it's a very, very meaningful project, both on the value side and on the volume side as well. But critically, again, this is a project that is next to existing infrastructure, even though it is located in the northwest of Shetlands. Therefore, the key objectives for the Corallian investment, and indeed very specifically for the Victory project, is to firm up and identify specifically what the access solution is to this infrastructure, commission a CPR, again, a competent person's report that will independently verify the recoverable resources and the value, which we think will be very well supported from the numbers I mentioned earlier. And then critically also is to submit a draft field development plan to the regulatory body called the Oil and Gas Authority of the UK. And all of that is to take place by the end of the year. And I think by the time we get to the point of submission of this draft field development plan, it will have materially de-risked even that development aspect of the Victory project, and is likely to be a key liquidity event and key liquidity points for that investment and for the project. And therefore, although the rest of this year is very exciting with what we have lined up in West Newton, we shouldn't lose sight of how important this year is for the progress of the Victory discovery, the Victory field, and the Corallian investment.
Stephen, if you could just share with us if you have identified any more monetization opportunities across your portfolio?
Yeah, sure. So the first thing to say is that every asset in our portfolio is always available for monetization. This kind of goes back to the strategy that I talked about at the start, that really we're looking to maximize the exit value versus the entry value and the amount of money we have to invest in projects. So if we get the right offer to monetize a project, it's always something that we would consider. Now, having said that, when we look at each project, we think there are certain key value unlocking events that are likely to need to take place in order to achieve a kind of optimized monetization event. And we've already talked through the two biggest projects, West Newton, and Sachin was just talking about Victory, and all the activity that's going on there within the course of 2021. And that activity is likely to be the thing that unlocks the opportunity to monetize it in a very effective way. So that's when you might start to think that we'd be most likely to look at monetization. Although, as I said, we never put a specific monetization timeframe around any of these projects because we want to be opportunistic. And then when we look at the other areas of the portfolio, our assets in California are already in the monetization stage to some extent because they're in production. So we're producing the oil and we're selling the oil. So we're monetizing that one all the time. That doesn't to say we exclude a more wholesale monetization event, but California is the most mature project and is already in that position where we're generating cash from it and in the process of monetization, but through oil sale rather than asset sale. Clearly the last year or so has not been the sort of macro environment in which you really want to be a seller of assets, right? It's clearly been a buyer's market, not a seller's market. There's been so much distress in the industry that it's really not been the time to sell something. Now, in our view, that is starting to change. So the oil price is in a healthy place and it's been there for a little while now. And I think companies are getting more and more confident in their ability to transact and to pick up projects at reasonable valuations. And further, I think that the oil price downturn of 2020 has really highlighted the importance of quality of asset as well as just quantity of barrels. And I think it's something we've always targeted projects that we think will make money for the ultimate producer in any reasonable oil and gas price environment. And that hasn't been the case for a lot of projects that have been attracting capital in the industry in recent years. And that was really highlighted in 2020 when the oil price collapsed and we saw a lot of companies with projects that were no longer feasible. We saw companies going bankrupt. We saw a lot of distress in the industry. And I think that's refocused potential acquirers' minds on picking up projects that have essentially low development and operating costs. And that's exactly what we've got in our portfolio. So, we're pretty confident that when the time comes, when we've carried out the necessary activity across the project, that the monetization opportunity will be there.
Great. Coming to you, Sachin, since Stephen just talked about the California project, so how is the Reabold California project progressing, and to what extent do you feel it was impacted by COVID?
Thanks for that question. But maybe before answering it directly, it's worthwhile highlighting a couple of points, and particularly related to what Stephen had described about the overall Reabold strategy and ethos. So really the California project area, being the most mature, started off with no production on it, and is really a project area that has proved up the execution and is a proof of concept for what we're actually able to achieve in terms of value creation. So in California, we've drilled 5 successful wells, and we had put them on production and really created that business from scratch. And it highlights the fact that these were low technical risk opportunities and you were able to get them into monetization phase and production phase quite readily. In addition to that, again highlighting a point that Stephen had made, was that these operations are low-cost operations and robust even at a low oil price. Now, overall, when we looked at Reabold California, that is supposed to be and is a self-funded for growth type entity. What we mean by that is it is not a call on the rest of Reabold's cash position in order to grow that business. It will generate its own funding for that growth. Now, addressing your question directly, how was it impacted by COVID? Well, not so much by COVID per se, but by a different, albeit somewhat related issue, which was the very low oil price. Now, all of the project itself was extremely robust in terms of being able to maintain positive cash flow during a very low oil price environment, during that COVID time. What it did mean was that we were not able to generate sufficient funds to be able to pursue some of those new drilling opportunities and growth potential opportunities within the portfolio. But I should stress that we remain very excited by those low risk drilling targets on our license area. And as things improve, we would look through that organic growth that I described to pursue them going forward. But again, as Steve said, although the California is sort of in that monetization phase through the very natural part of production, it does not preclude us from looking at other ways of kickstarting or further accelerating that growth through inorganic opportunities. And that's something we always have our mind on, but whatever we do, it will have to adhere to the strategic objectives that we've already spoken to. It would also be worthwhile highlighting that California itself is an opportunity because there are so many good quality assets there, but there are a number of distressed players who've been struggling because of that COVID situation, low oil price scenario. So it's still there doing very well as a standalone entity, but clearly the growth trajectory had been curtailed because of what that COVID situation had resulted in from the low oil price scenarios.
Absolutely, Sachin. And if I talk about the technical studies for IM1 well at Daniel Petroleum project, so when can we expect that to happen?
Yeah, again, thanks for the question on very specifically on the IM1 well in Danube Petroleum, which is the Romania project area. It's worthwhile, again, just taking a quick step back, that the idea for the Romania project area was pretty consistent with everything else that we discussed. It was low technical risk opportunities next to existing infrastructure, such that if we had success, we could tie it into that infrastructure relatively readily. Now, we had drilled the IM1 well and announced that as a discovery, but through various issues, we've had challenges during the test program for that well, and that was impacted by the COVID activity and continues to be that forward activity is hampered by the COVID situation. However, we do remain and believe that there are solutions that can be achieved for getting the IM1 well to flow successfully on test. We are still undergoing the full evaluation of that work and will update the market when we've got that information, and more importantly, what specific activity we'll be carrying out and what remedial work needs to be done in order to demonstrate economic viability of that project area. And it's not just the IM1 well we also have the IM2 well there. So Romania is probably a little bit behind the other areas, the other projects we spoke about from a timing point of view, but certainly something that we have lined up in our mind to tackle relatively soon. As I say, we'll update the market when we're in a position to do so.
Sure. And, in fact, when we talk about Reabold, it also went for a fundraiser of about £1.5 million at the beginning of the year. So how are these funds being used, and is there any further fundraising plan in the near future, Sachin?
Okay, so just to clarify, that was £7.5 million was the fundraise that had taken place at the start of the year. But yes, to talk about what the funding was earmarked for, this is really what we'd spoken to already. The £7.5 million was earmarked for two key project areas, which was West Newton and also for the 𝐂𝐨𝐬𝐴 investment opportunity, and very specifically moving Victory forward. Now, we have to bear in mind that the Reabold strategy, as Steve had outlined at the outset, was really this idea that we are able to recycle the capital that we generate from projects that we've moved up the value curve in order to try and find those really, really low value opportunities, even though that they're technically de-risked for whatever reasons that project area ended up in being stranded. Now, what this funding allows us to do is to move those two specific projects forward to the point that we believe that we will be able to recognize significant and substantial value from them, either partially or fully. This is really important to state, because that precludes the need for any future funding for Reabold, and still allows us to pursue one of our key skill sets, which is identifying really high quality, low entry price opportunities and moving them up the value curve. Now, again, I say that within the context of the fact that we can't be specific about saying anything about future fundraisers, but what I'm trying to highlight is the strength and power of the Reabold strategy when we get it working right and when we deliver the value inherent, particularly in those two areas of West Newton and of Victory.
Sure. And coming back to Reabold's long-term strategy, we know that it is to reinvest capital made through its investment to larger projects. So Stephen, I would like to address this question to you. If you could please elaborate upon your differentiated strategy.
Yeah, so the idea of the size of the project is kind of crucial here. So one of our key investment criteria when we look at the projects we go into, that not only is it high quality, has it got the potential to deliver really good returns, it's also got to be something that we as a small company are capable of funding sufficiently to really get to the point of value recognition, so that we can then monetize and then recycle capital as appropriate. And that's meant that we've actually had to exclude certain projects that satisfy a lot of the criteria that we look for, but are just too big for Reabold to be confident that they can solve the funding solution for. Now, clearly, if we can recycle some of our projects and then have a lot more capital available, then that opens up the world to larger projects and allows us to potentially get after some of these future projects that we've had to exclude before because they're simply a little bit outside of our funding capability.
Sure, and to wrap up this entire segment, one quick question from you, Stephen. Are there any new investment plans in the pipeline, and what are the short-term strategies amid the current scenario in the E&P segment?
Yeah, look, it would be a great time to be investing in new projects in some ways, because clearly there's been a lot of distress in the market. Sachin and I spend a lot of time looking at every potential investment opportunity. So we are very, very close to the market, I would say. We would be ready to make investments as appropriate. But as we've just been talking about, the focus at the moment and the cash that we've raised recently is there to progress the current projects in the portfolio. And we've kind of touched on likely timeframes for activity and potential monetization. And I guess anyone listening to this could then make an assumption about when we might be likely to look at incremental investments.
Well, great. Thank you so much. And I hope that was a great show. And it was a pleasure chatting with both of you, Sachin and Stephen. And I wish you all the luck for your future endeavors. And thank you so much for your time.
Thank you very much for having us. And we enjoyed talking through the story with you. Thanks again.
Thank you.
And with that, this is me, Santa, and I will sign up for the day. But don't forget to watch this space for more. Till then, stay apprised and invest wise with Kalkine.